Hello, everybody. Welcome to Wednesday. The S&P 500 was up almost 0.5% today. A very interesting day, actually. For the longest time here at the end of last year, beginning of this year, we kind of had what's called the Magnificent Seven, these big, Microsoft and Amazon and such, Nvidia and what have you, kind of driving the market forward. And a lot of these indexes are weighted based on the size of the company. So the big companies moving really can move these indexes nicely upward. But since really the beginning of the summer, we've been seeing some rotation. Once in a while, the big stocks will do well, but then all of a sudden it's something else. So today it was really one of those rotation days. If you look at the S&P 500 equal weight fund, which is where Apple is the same weight as every other company on the S&P 500, that did a lot better than the S&P 500 did today, which is, of course, weighted based on the size of the company. So Apple and Microsoft, for example, are going to have a much bigger impact. And we saw runs out of the financial sector, which is the banking sector. We saw runs out of the real estate sector today. And so it's really, nice to see this kind of broadening out of the, growth of the market as a whole. It can be kind of dangerous to have just a few stocks running and running and because you get overpriced in those. And if they come down, you don't have anything else going on. But we're seeing rotation. Today, we had a 3-year high for the small cap stocks, for example. And so it's good. And this is why I've been talking about all summer and talking about mostly on the show. You want to stay pretty well diversified. We have our little targets where we go after things, like real estate and banking or whatever it might be. But mostly, most of our money is in these broad market indexes that try to capture kind of everything. And when the market starts to get into this mode right now where things are moving around almost on a daily basis, we have different winners every day. It's very hard to capture that with your targeting, investments. So you have that broad market exposure, you can kind of capture all of that and move forward. And again, I've been saying this for a while, it's probably the best way to go here in this particular market. We saw the same type of thing happen in 2021. Broad market did very well, but the rotation was violent, kind of daily, weekly movement from one thing to another. So you just needed to kind of buy the whole market versus say 23 and the first part of this year being more targeted into those big tech stocks was really the way to go. So, it changes over time and just that way that things go. It's part of the market cycle. And so very good day to be an investor, good day to be in the market today. And bond market even did well today too, which is great to see. And so look forward to seeing what's going to happen tomorrow. Thank you very much.